P7 is personally divided into this particular 3 separate chapters. First of which is before the assurance service. So what we're going to talk about here is something like the practice management issues. So things like your advertisement, your tendering, your factors to consider, etc. So the second chapter is during the assurance service. So here it's divided into the audit assurance and the non-audit assurances. Okay? The third chapter we'll talk about is the current issues. So things like the competition, which means the government may try to encourage the audit firm to do something called the joint audit. Are there any guidelines that is set by the ACCA towards the advertisement of our audit firm? I use a mnemonic called B, C, D, E, F. First B stands for back up. So any information you give in your advertisement should be back it up. You can't say in your advertisement you are the largest and biggest audit firm in the world without giving any detailed information such as your sales revenue and number of offices of your audit firm in your advertisement. If you're trying to identify any risks that will lead to the balances within the financial statements being misstated, and this kind of risks is called the risks of material misstatement. Okay? And the ACCA, International Standard on Auditing 315, just tells us, okay, there are 5 particular aspects here we would like to consider in order to identify this kind of risks of material misstatement. The first aspect is something to do with our internal control systems. So if the internal control system is quite strong, which means it will detect a lot of fraud and errors within the company, and the risks of material misstatement will be assessed to be very low given the low control risk you have within the system. I'm trying to let you the current issue here. I'll only draw a very beautiful diagram. So this is the audit firm and providing some kind of audit services, and this is done by the auditor. So what we are going to do is to, in turn, look at the current issues in these 3 aspects. First of which is that the audit firm nowadays is facing severe competition because there are lots of audit firms emerging in the market providing the audit services to the clients. Okay, so if that's the case, well, this will be a very severe competition within the market, and each of the profit that can be shared by each of the audit firm will be lower down. Which means, well, there are lots of audit firms that will die each year. So maybe the government does not want this kind of phenomenon to continue into the foreseeable future, and the government may try to encourage some kind of joint audit happens. So joint audit, which means, well, the small audit firm can participate into the audit of the client's company with the big audit firm. Okay, they conduct the audit services all together and give the audit opinion jointly. In paper F8, the syllabus can be personally divided into these particular 3 chapters. First of which is something to do with our corporate governance and also the audit committee. So this kind of things we will have to talk about in our chapter 1 of our study. The second chapter I'd like to talk to you is how to perform an audit service engagement. So how to perform the audit service, then there will be 6 stages we will have to go through them. And the third chapter is something to do with our extras. So here we will talk about firstly the non-audit assurance services such as our cash flow forecast And secondly, what we're going to do is to talk about the non-profit making organizations audits. In order to obtain sufficient and appropriate audit evidence, what we are going to do is to perform some kind of testing. So this kind of testing here will comprises firstly the control testing, and secondly is the substantive testing, which means substantiating the balances within the financial statement. The control testing, which means test the control systems within the company. So how to perform a substantive testing then? Using a mnemonic called AEIOU. So firstly, analytical procedure. How can we do that? Well, just compare the information with the previous years to identify any unusual change. So such as your profit figure, okay, compare this year's profit figure with our previous year's profit figure to identify any unusual change. Time value of money simply tells us as time goes by, the value of the money goes down, which means it tells us we'd rather receive the money today rather than tomorrow. So are there any reasons for this? There are particular 3 reasons for the time value of money. There will be inflation, which means I would rather receive the money today rather than the money being inflated in 3 days' time. Or it can be the risks of default. I would rather receive the money today rather than tomorrow, because maybe tomorrow your company goes bust, you don't have money to pay for us anymore. But this P3 is divided into these particular chapters. First of which is the before setting up the strategy. Okay, so what we're going to do is that, well, it's up to the board of directors here to set up a strategy. So the first thing we'll have to talk about is the corporate governance. Second thing we'll have to talk about is to identify any kind of stakeholders within the organizations. And third thing we have to talk about is the culture. And the fourth thing we have to talk about is the ethics and corporate social responsibility, that kind of thing within our chapter 1 of our study. And chapter 2 of our study is setting up the strategy itself. Okay, it's the processes, isn't it? So the strategy can be divided into these 3 separate strategies. Firstly is the corporate strategy. It simply talks about which industry you are going to be in. The second one is the business strategy. It simply talks about how you're going to compete with your competitor. And the third one is the operational strategy. It simply talks about how to allocate the resources within a company in order to make your corporate and business strategy implemented successfully. How to set a corporate strategy successfully. There are 4 steps you can follow here. So the first step is to decide which industry you are going to be in or leaving. Okay, so if you're a mining industry nowadays and you want to enter into an education industry, so the industry you're going to be in is education industry. So the next thing you have to consider is that because you're having a current businesses, you want to enter into a new businesses, which means, well, the role of your company will be very important as well. So if you're going to be a parental company, which means you want to teach the child step by step how to start their businesses, maybe in this circumstance it's not applicable because you're a minor industry, maybe you have a lack of experience of how to run an education industry company. The next role of your company, you can of course create some kind of synergies after the acquisition within another company in order to diversify your risks, and also you can be a portfolio manager because you're aiming at diversifying your risks, okay, in order to create an increase in the market value of the company as a result. The first step you have to consider is, are there any possible strategies that you may try to use. So strategies can be divided into these 4 boxes here. So firstly is to divest, which means to sell off the existing company in order to generate into some cash into running the future businesses. Secondly is to harvest your existing company, so which means you are leaving some kind of machines within your company that runs slow down on its own rather than just replace them immediately. Third one is to hold your existing strategy, which means you are going to acquire another company into your existing company here. So in this case, well, you can keep your existing activity while running the new activity on at the same time. And fourthly, what you can do is to build up the market share of your new company or existing company, if you like, which means you're doing some kind of advertisement bit for your company. So build up the market share of your company. The fourth step is that, well, after understanding which industry and role and possible strategy, but you have to understand or remember your vision, mission, and values within your company. So vision will be the destination, which means the market leader within this industry. So the mission will be, how can you do that? Well, become market leader within the education industry here. Our mission is to provide high quality courses in order to ensure a pass in all the ACCA papers. And the values will be, when I'm teaching the ACCA papers, I have to be enthusiastic in order to guarantee you a pass in the exam.